Hello everyone, this is Kishore. Welcome back to my channel. Today I'd like to share my short-term and mid-term view on the stock market, and also I'd like to share few slides on my long-term view on the stock market. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. So this is the VIX futures chart. I got this from the CFTC website, like the Commodity Futures Trading Community. They release that data every Friday after 3 p.m. EST. I downloaded the data, I made a chart out of it from the January 2025. And you can see there are four lines in this chart. The green one is the commercial long, and the red one is the commercial short. Commercial means hedging side, hedgers. So right now we can clearly see here hedgers are taking the VIX futures on the positive side. It's a huge spike in this. Looks like they're expecting some volatility in the market, means there is a high chance the market can go down. Non-commercials is like a speculators. I'm not giving that much importance to that for them in this chart. And this is the VIX daily chart. In the upper side, you can see the VIX, and the downside, you can see the SPY. Whenever the VIX daily chart trend line is broken, market went down. So it happened couple of times in the history, and I'm seeing the similar kind of thing here. There's a huge trend line is there. If it breaks here, market can go down from this current levels. And this SPY daily chart in the top and the bottom is VIX. Whenever there is a green close on the SPY, VIX also closes green. That's a big warning sign. Looks like that happened in the past, like in the Feb 2029, 25, in the Feb 19th, market closed, SPY closed green, and also the VIX closed green. After that, VIX went up and market went down. So similarly, on 27th of August and 20th of August, SPY closed green, and also the VIX closed also the green. So and on Friday market went down, so I'm expecting there is a continuation of this one. The trend may continue, like VIX can go up and SPY can go down, and also I see little bit of negative divergence on the weekly chart of the SPY with the RSI. Whenever the price SPY price goes up and there is a huge negative divergence on the weekly chart, there is a high chance market can go down based on the other factors, including. So here I see the negative divergence here. So SPY went up from the April, but RSI is stayed flat. And last 10 weeks, there is only 1 week is the red candle, remaining 9 are green, which shows the strong momentum in last couple of weeks. But looks like that momentum is fading off now based on the RSI negative divergence. And this is the Fibonacci SPY daily chart. I draw a Fibonacci levels from the 6059 to 480. And when I draw this one, the Fibonacci level 1.272 comes around 644.50. Right now, the market is struggling to cross that level, and based on this negative divergence in the VIX, there is a high chance it can go down. If it goes down, 622 is a very good support level for the SPY. If it break, then 610. But 622 is my first support. But if stays above 645, then 662 is the main resistance of the SPY. And this is risk on versus risk off, means XLY. In the top you can say XLY by XLP ratio, means the XLY is a discretionary, which is like a wanting, people wanting things like apparels, jewelry kind of thing. XLP is a staples, like daily needs, like groceries, dairy, all that stuff. So the ratio is showing the negative divergence with the SPY price action. It tells like a risk on versus risk off. If market goes down, so money moves from the risk on sectors to the risk off sectors. And this is QQQ weekly chart. So I draw a Fibonacci level from the 540 to the 401 level, and right now it is struggling to cross this 1.272 levels, like 577, and also the RSI is going down. So it looks like the momentum is fading off. If it breaks 520, 577, then 597 is the next target. Otherwise, it can come down to the 554 or 540 level. Looks like for me, like 554 is the first support. If it breaks, then 540 is the next support. And this is IWM weekly chart. Again, I draw a Fibonacci from 243 level to the 171 April lows. And right now it is just above the 0.7786 level, which is a good. But last week candle looks like a spinning top kind of candle. Again, I see the similar kind of thing in the 243 level, and then market went on. We had similar kind of thing in here, like in the June, in the month of June, but at the time the volumes are up, very good volume. So that's the reason it broke that level and went up. But right now the volume is not supporting this thing, this price action. So volumes are going down, and also the RSI is negative divergence. So that's the reason I'm expecting it can go down now. So if it goes down, 215 is a very, very good support level for the IWM. And this is the pattern. So last 5 years after the Jackson Hole meeting, S&P went down. So you can clearly see the dates and the and the meeting date, and after that the price action, the rate. So similarly, and we had the Jackson Hole meeting. So similarly, I'm expecting similar kind of pattern will follow now, based on the VIX futures, VIX pattern, and also SPY negative divergences. So the short term view right now, the market is up to. I'm expecting market can go down by 9/12 or September 12 by September 19. So September 19 is the quad, which by the time I'm expecting this kind of market can go down to the levels I shared. And my midterm analysis is like this is a 4 year presidential election cycle. So, and it is divided into 4 quarters of each year and the performance of the each year of the Dow Jones, S&P, and the Nasdaq. The third quarter is little bit bearish, but not that much. It's okay kind of thing, and especially September is okay. Nasdaq performed really well in the month of September. So by looking at this one, and also the October, November, December, all three indices performed really well. By looking at this one, September, if the market goes down, it's a buy the dip kind of opportunity. But again, we need to see what the volume and the price, where it is, and how deep the market went down. Based on that, only we can say it's a buy the dip or not. But based on the pattern of the midterm, it may go up. It's a buy the dip opportunity. And also this is another chart, data point, president based on the presidential year. This the top three rows are Republicans, second term president, and the first term president. Trump is the second term president. So the second half of the year, August, September, October, are the red color. I mean, it goes down historically on an average. But August is green in this year. So September, October looks like a little bit bearish to me. But if it bounces back and do good, then it's really good for the bulls. Otherwise, September, October are the buy the deep kind of opportunity. And the last chart on the midterm analysis is, so the speculators net short VIX positions at highest since 2022. So a lot of speculators are expecting the VIX can go down. A lot of very good short positions are taken. This is a bullish sign to the stock market. That's the reason I'm expecting the midterm market can go up. Market is bullish to me. Now coming to my long term view, to see the long term view, I just pulled up the SPX yearly chart, and from year 2000 to 2013 market went sideways. So there is a dot-com bubble. After that it bounced back, and again in the financial crisis it came down. Again it bounced back. After 2013 breakout this channel, market went up parabolic. So, what caused the market went up parabolic from year 2013 to 2025? Are the policies, fiscal policies, monetary policies remain same or intact, and will it continue next 10 more years or not? Or will it go sideways like this? So, we need to see not just US market, we need to see the emerging markets, global markets. Then only we know whether the market will do the same like 2013 to 2025, or will it do the 2000 to 2013. And there are different players are there in the stock market. We need to know them as well, what they're doing, how they are doing, like banks, hedge funds, pension funds, mutual funds, foreign investors, and private equity. And also a lot of other markets are there. They are all interconnected, like futures market, bond market, credit market, forex market, repo market, and swap market. Bond market is bigger than the stock market, and forex market is bigger than the bond market. Repo market is bigger than the forex market. Swap market is bigger than the repo market. So these are all the different market. They are larger than the stock market, and stock market is a reaction of the anything happens in this market. So we need to look into these markets, and also we need to look into the global markets as well. And this is my final chart on this long-term view. This was created. This chart is created in 2013 by Portfolio Strategy, and they created the chart comparing the emerging market with the US stock market. And this green line is the ratio of S&P 500 with the MSCI emerging market. MSCI is like a 24 countries emerging countries indices, growth indices. So when they took the ratio of it, year 1988 to 1994, emerging markets performed well compared to the S&P 500. And after that, there is a global transition. There are a couple of years, 94 to 96, and from there to S&P 500 did really well compared to the emerging market. After that, again there is a global transition, and then emerging market performed really well, and there is a global transition between 2008 to 2012. From there, S&P 500 really performed well compared to the emerging markets. Now we are in the 2025. It did really well when you compare it with the global market. US stock market is like a 49.1%, and remaining all are 50%. So US stock market performed really well. But is that continue? Like what it says is valuation don't relate to performance trends, business cycles and policies do. So business cycle policies, what are the business cycle and policies helped the US stock market to grow in last 10 years? Will it continue next 10 more years or not? Is the big question to us. So I'll go in deep on this one long term view in my next video. I'll make a video on this one. I do not know when exactly, but I'll make a video on this one, and I'd like to share on that one. And my summary is based on the seasonality charts and also the weeks and all the stuff. Short term view is bearish to me, but the mid term view is bullish by looking at that presidential cycle and also weeks shorting positions of the huge weeks shorting positions. And my I'll share my long term view in couple of weeks in my video. That's all for today. Hope you like this video. If you like this video, please watch, share, and subscribe to my channel. And please hit the bell icon so that you'll get notification when I upload a new video. Thank you so much. Bye bye.